When people ask how many stocks should be in a portfolio, 10, 20, 50, there is no perfect number that works for everyone. But I think there is a point where owning more stocks stop helping and starting making the portfolio harder to manage. Every company requires attention. I need to understand how it makes money, what drives its growth, how much debt it has, what could weaken its competitive position, and whether the valuation still makes sense. If I own too many companies, I may know their ticker symbols, but not really know their businesses. That is usually a warning sign. Another question I ask is, does each stock make a meaningful difference? If a position is so small that even a great result barely affects the portfolio, why do I own it? Sometimes tiny positions become placeholders. I bought a little, planned to research more later, and then simply forgot about them. Before long, the portfolio becomes crowded with stocks that have no clear purpose. That does not mean a concentrated portfolio is always better. Owning only 2 or 3 companies can expose me to serious risk. Even a strong business can face unexpected problems. So I want enough diversification that one mistake does not damage the entire plan. But I also want enough focus that I can understand what I own and allow my best ideas to matter. For one investor, that may be 10 companies. For another, it may be 20 or 30. The right number depends on available time, experience, risk tolerance, and how closely the companies need to be followed. A simple test is this: can I explain why I own every stock? Can I follow the important developments? Do the positions have a clear role? And would I still buy each company today at its current price? If the answer is no, the problem may not be that I need another stock. The problem may be that I already own too many. A portfolio should be diversified enough to survive mistakes, but focused enough to understand. The right number is not the largest number I can hold. It is the largest number I can follow well.